Welcome back to my channel, everyone. Thank you for tuning in. And this video is going to be a trade review, trade recap, whatever you want to call it, going over some of the plays today, going over my thought process, and going over some of the stocks that we traded in the Discord room and some of the trades that we actually took. Now, I do trade recaps like this on a daily basis on my Instagram. I will link my Instagram in the description below. Definitely worth a follow. So today we traded the S&P 500 I'm going to go over. We also traded Facebook, Roku, Apple, and the QQQs or the NASDAQ future, depending on what you chart. And also, if you guys want to see more trade recaps like this, trade reviews, subscribe to my channel, like this video, and comment any questions you have. So without further ado, let's get right into the video. Okay, so the first thing I want to get into is the pre-market plan, and I post these plans every single morning, going over the highest quality supply and demand imbalances, and the top plays and the top stocks that I'm really looking out for. And I try to detail it as best as I can. And obviously when the market does open, you're going to have a mixed reaction from market participants. So not every zone is set in place, but not every plan is set in place. And it's more of a scenario game because we have supply and demand imbalances. I'm going to explain that. So the S&P 500 today was opening up, in no man's land. We had supply above and demand below. So you have to create two scenarios because you really don't understand which way the market is really going to head. Yeah, you could try to guess and have a bias, but if you have a bias in the market, you're basically going to screw yourself because automatically and subconsciously in your head, you're going to say, oh, I'm bullish. So maybe, I'm not going to short the market when we rally into supply. So never have a bias. Come to the market with your imbalances and only trade based off of those imbalances. So today we had the S&P, we had a 2-hour supply above and a 1-hour demand below. And we also had a 30-minute supply that was created at like 3 or 4 a.m. Eastern time in the overnight session. So I plot these zones on my charts and then I wait for price to react and trade in these zones and see how market participants, are they agreeing on price? Are they disagreeing on price? Is it going to be a balanced? Is it going to be an imbalance? So this is a 5-minute chart on the S&P, and I'm going to try to break it down as best as I can. Now, remember that yellow box that we had as the 30-minute supply zone? Well, we had economic news today, and the market ran right past that zone, and we actually rejected, if you don't look at what happened during the day, we rejected this 2-hour supply zone perfectly. You trade futures, you see the high volume coming in. I love seeing high volume inside a supply or demand zone. That means either a reversal is imminent. You have buyers and sellers basically absorbing price up here, and then the market, rejected this 2-hour supply zone. That yellow box is an invalid zone. Price blew right through it. When price blows right past the zone, breaks the level above or below, I completely invalidate that zone and I remove it. So now fast forward into when the market was open, we rallied into the supply zone. So whether you shorted at the first test, as it looked like it was coming down, I personally would not have shorted it here because this looked like it was creating new demand, and it actually did create new demand for another leg higher. And then we rejected pretty much the supply zone perfectly. I want to explain to you guys the market was balanced today. So to get a good understanding, now I'm going to make a video on this, but to get a good understanding of how to know if it's going to be a balance or imbalance type of day, trending or consolidation type of day, is look at the first hour. Look at the range of the market and also look at the pre-market high and low. Are we above the close yesterday? Are we above the pre-market high? Are we below the pre-market low? The pre-market high and the pre-market low today was support and resistance. It acted as a ceiling. It acted as a floor. So we couldn't get above it, couldn't get below it. And especially the first hour, we ranged in about a 14-point range, 15-point range. And that's nothing compared to the S&P 500. We were getting 15-point ranges in a 5-minute period, a month ago. So automatically off the bat, I saw us rallying into supply. I knew it was going to be a choppy day, especially that there was really no volatility. Volume was low. And on days like this, you have to recognize that. Either size down, either don't trade at all, or take your profits fast. One thing to note is that we created demand down here after we dropped and then quickly rose up. The first time we tested supply, there was no reason to short. A lot of people think that we're in supply, you have to short it. No, you have to wait for sellers to tell you it's okay to short it. This created new demand, and then we rallied above. Then we broke above the high, and I love higher day breaks. and that immediately get rejected. That's basically telling me there's a strong seller sitting up there, and the fact that we're in supply is going to really agree with the level that much more. So right here would have been a good entry for your first trade. Another entry which I personally took was a head and shoulders pattern. So we have a left shoulder, a head, and a right shoulder. Keep in mind, we had demand down here. I short at supply and take profit in demand. I do not buy trend line breaks. Yes, we broke this trend line, and yes, you could have got a couple points to the downside. That is not my style. You will get faked out more often than not. I shorted this once I saw this right shoulder forming, and as the market came down here at this 1150 bar, I took it short, and I put my stop loss above this high that it made here on the right shoulder. So it was about really a 2-point risk, and my reward was about 7 or 8 points. So not a bad risk to reward. And like I said, with choppy markets, balanced markets that we've been seeing the past couple of days, look at this day, completely flat. You can't trade that. Look at this day before that rally, completely flat. You really can't trade that. So in this market, taking profits fast, and I'm taking them when I have them. Rejected this head and shoulders, took profits in demand. That's the way you have to trade. You have to take your profits very fast. That's just what I've recognized in the past couple of weeks with the market. And then keep in mind also, my target was short at the supply and take profits at demand. But I recognize that it's going to be tough for us to come down in this demand, especially how we're trading. You have to adapt to what the market is telling you. If you try to set in stone every single day and try to trade the same every single day without, deviating away from your style or switching up your mentality, then you're going to get burned. I'm telling you, you're going to get burned if you do not adapt to what the market is doing. And in my opinion, the best way to learn that is through screen time and experience. So I knew that it was going to be tough for us to come into this 1 hour demand. I knew that the market was balanced. I knew I had to take profits fast, and that's why I took profits in this 5-minute demand zone. So the next trade I want to go over is on Apple, posting this in the intraday commentary tab. And this was a tough trade. It was a small loser for me, which I'm cool with, but I want to break it down as best as I can so you guys can learn from it. So we had 30-minute demand, which formed yesterday from the rally, massive rally. Price sold off the first 15 minutes and started bouncing off this demand. Nice volume, nothing crazy. I took this long over 451.5, and I didn't really think that this supply zone was going to reject us the way it did. It was a small zone that was created this morning, so nothing crazy. I took it long, rallied into supply, and I was stuck in this move to the downside. What I like about this, and the reason why I stayed in this, is people buy lower day breaks. If people are trading this to the short side, you could get a point out of it, but there's no reason to short a lower day break. Lower day breaks and you do not realize we're in demand, that's a recipe for reversal. When everybody's shorting this break, or, coming down, shorting this, they're buying. Who's buying? The demand is buying, and those orders are getting filled, providing liquidity for the institutional buy orders for another leg higher. So I was cool with it breaking below lower day because we didn't spend too much time down here. If we started basing below lower day and trading below it, and it was really agreeing with price below the 449 level, then I probably would have sold. But the fact that we came down and immediately bounced up off a lower day told me that there's strong buying down here. So I stood in this trade, and then we got like a weird wick, which is pretty much a misprint on ThinkorSwim. Could have been a ticket that got filled all the way up here. But then we came into this 453 mark. Now this 453 was a top, watch. This was what I posted, and we rejected it the first time, which you could see from here. And next time we failed to stay above 453. And once we started coming down, I sold this, I think, at 452.5, and it was a small loss. I think it was like a 7-cent loss, so nothing crazy. I'm happy the way I managed this trade. Didn't get scared. I know a lot of people will get scared once you break a lower day, but you have to trust the plan. We technically are in demand, and you have to think of who our opponent is. In this case, if you're shorting to the downside, who's your opponent? If you're shorting, someone's buying from your sell order. Who is buying down here? Is the people in this demand. So it's important to recognize that, and you have to be reactive to what the market, again, is telling you. Came into supply, I rejected it. That's my go ahead to just say, get out of this trade. I don't care if I'm winning small on it. I don't care if I'm losing big on it. Get out when I have to get out and move on to the next one. As you can see, Apple came back down, tested this demand for the third time, and then broke below. Came to this demand, gave us a little bounce, but broke below this demand. So these were no real valid trades today. The trade I took was managed well, and I'm happy with the way it planned out. Now the NASDAQ, or the QQQs, was another perfect one. We had a 3-hour supply zone. Now going to an intraday chart, this was a beautiful, beautiful thing to see. Choppy in the morning, if you don't know what's going on. Reject supply. Yeah, you could take it short and get a couple points off of that. But the main play was we broke above high a day. Volume started coming in. Volume starts coming in. No follow through. The stock or NASDAQ starts coming down. Take QQQ short right there. Put your stop above high a day. It also matched up with pretty much the pre-market high and the close of yesterday. And this thing sold off, broke low a day, hit demand, started bouncing at demand a little bit, and then boom, immediately failed. And it was a massive sell-off day based off of this 3-hour supply zone. Like I said all the time, these higher time frame zones act like magnets, and these will provide you the greatest reactions. If you go to a 1-hour chart, we created supply inside of supply. This was a massive trade, and congrats to all those that took QQQ short today, because that was definitely a big one. Next trades I want to go over is on Facebook and Roku. So Facebook and Roku, compared to the other stocks that we do trade, was relatively strong. We held VWAP over here and then rallied. Strong volume, right? The difference between this strong volume is that there was follow through after. When there's strong volume but no follow through, that's a reversal. Strong volume with follow through means continuous trend. We started coming up, and right here created new demand. You could take this long once we start creating new demand. And in fact, for all these technical type of trades, it started flagging up here. So this would have been an entry for me, a break above 273 at a speculation that new demand was forming, and you could have rode this all the way up. And then we eventually created supply in this area. Same thing with Roku. I have a video about the 5-minute scalping strategy. It applies to any time frame because it's basically a candle structure that I look for. We rallied, strong volume coming through, based out here. This creates new demand. Take it long once you break above the high, or take it long speculating that demand is going to form for another leg higher. Don't hop in long once we start, trading straight up. Hop in long out of speculation that demand is going to form. Don't skew your risk to reward by buying, high a day. You have to protect yourself and make your risk to reward as best as possible. You don't want to risk a lot, to make only a little bit. We then came down, bounced at this demand. Probably wouldn't have taken this trade long at this demand because it really wasn't the strongest level, but and then volume started dying down. But the two trades were to recognize the hot stocks. If I go back to the screen, the most trending stocks that weren't choppy were Facebook and Roku. And I noted that today in the chat room that, hey, look, you should be focusing on Apple, Roku, and Facebook. Those should be your top watches because those are the strongest. Then you take, intraday demand zones that are forming as your entries, and those would have been the best plays today. So I hope that cleared up some things. Basically a recap, me ranting over some of the plays and going over hindsight, how you could have traded it, how we did trade it. So I hope this helps. If you guys enjoy these type of videos, drop a like, comment, and subscribe.